Okay, let's unpack this. Today's deep dive is focusing on one of the strangest paradoxes in modern commerce.
Right.
We have these entire industries, perfectly legal, often huge revenue generators.
Multi-billion-dollar industries in some cases.
Exactly. And yet they're systematically shut out of or, just punished by the financial systems that we all take for granted.
That is the core tension we're diving into. Our mission today is to really understand the operational pain these businesses face, the ones the system labels high risk.
Or restricted business, right?
That's the term, yeah. And then we'll analyze a new solution, SatsPay, that seems to be built specifically to liberate them.
When you say punish, that sounds pretty dramatic. But the source material makes it clear this isn't an exaggeration at all.
No, it's not.
So why is the financial system treating these legitimate businesses like pariahs? Is it a moral thing, or is it just that the infrastructure is old?
It's almost entirely the infrastructure. I mean, it's overlaid with decades of regulatory gatekeeping, sure. But the rails themselves, Visa, Mastercard, the banks, they were built for a really low-risk world.
Like selling shoes at a department store.
Exactly, or paying for groceries. The moment you introduce something like adult content or regulated things like CBD, the legacy systems they don't know how to price that risk.
So they just label it restricted and either say no or charge a fortune.
Pretty much.
So who are we actually talking about here? Give us the list of industries feeling this pain.
The list is surprisingly broad, and these are often some of the fastest growing sectors out there. We're talking about the entire adult entertainment industry, the massive state legal cannabis dispensary market.
Which is huge now.
Huge. Then you have all the shops dealing with things like vape, CBD, Kratom, kava, and even more traditional places.
Like what?
Pawn shops, cigar lounges, and of course casinos and gaming venues. These places are generating massive legal tax revenue, but they just can't get a fair shake from their bank.
Let's really detail the financial damage here, because it's not just an inconvenience, is it? It sounds like it can actively cripple a business.
Oh, absolutely. The first big hit is just the processing fees.
Okay.
So a normal restaurant might pay, 1.5% to 2.5%?
Something like that, yeah.
These restricted businesses, they're forced to pay between 4 and a staggering 10%.
10%. That's not just cutting into your profit margin.
No, that's making the whole business model unstable.
But wait, it gets worse than just high fees? It's the operational instability that would, frankly, terrify me as a business owner.
This is the part people don't see.
Tell us about these account freezes and shutdowns.
Imagine you've built a legitimate business. You're hiring people, paying taxes, and then one day, poof, your account is frozen.
With no warning.
No warning. Or the processor just shuts you down completely. It happens all the time in these industries because some internal committee at the bank decided you don't fit their risk profile anymore.
So long-term planning is basically impossible.
It's a nightmare. And the cash flow issue, that's often the silent killer.
Okay, let's expand on that. The idea of 180-day reserves or clawbacks. What does that actually mean for a small business owner?
This is maybe the most damaging part. A reserve means the processor holds a chunk of your daily revenue, let's say 20%, for up to 180 days.
6 months.
6 months. They do it to cover potential future chargebacks. So if you're a busy dispensary doing $10,000 a day, $2,000 of that is immediately locked away for half a year.
So you can't use it. You can't reinvest it.
Nothing. It's like running your business while the bank holds your own working capital hostage. It just kills growth.
It sounds less like a partnership and more like a high-interest loan you're forced to give them against your own money.
That's a great way to put it. And this whole system is built around one concept that is just toxic for these businesses: chargebacks.
Okay, let's really dig into that. How does chargeback abuse highlight how outdated these legacy rails are?
The whole system is based on merchant liability.
Meaning the business is on the hook.
Always. If you, as a customer, buy something and then call your bank and claim fraud, the burden of proof is almost entirely on the merchant. They're basically treated as guilty until proven innocent.
And I've heard of friendly fraud.
It's rampant. People claiming they didn't get a service, or maybe they just regret a purchase, especially in environments like a club or when buying specialized products. The network allows them to just reverse it.
So the merchant does everything right, delivers the product or service, but months later, the money is just yanked back, and they eat the cost, the fee, and probably a penalty on top of that.
Precisely. It's a financial black hole, and it proves that the original architecture is just structurally hostile to how these businesses operate.
Okay, that paints a very clear and frankly painful picture.
Yeah.
So let's pivot to the solution. SatsPay. I love the tagline. Bitcoin's fast lane for high-risk businesses.
It's the counter narrative, right? It's the first payment rail built from the ground up specifically for this abandoned market. It uses modern tech Bitcoin Lightning to create final settlement.
Which is the exact opposite of that liability system.
Yeah.
The polar opposite.
Okay, we have to talk about the tech right away. Because
Right.
when you say Bitcoin Lightning, a lot of our listeners might think, whoa, I don't want to deal with crypto.
And that's the genius of the packaging.
Right.
This is the key. It is the most crucial fact here. SatsPay abstracts all of that away. Neither the customer nor the merchant needs to understand, own, or even accept Bitcoin.
Okay, say that again because that's a huge point.
The customer doesn't touch Bitcoin. The merchant doesn't touch Bitcoin. Lightning is just the plumbing. It's the incredibly fast, cheap, irreversible transport layer running in the background.
So if I walk into a cigar lounge in Vegas and buy a $50 cigar, I'm not using a Bitcoin wallet.
Not at all. The merchant accepts dollars. You pay with your credit card, your debit card, Apple Pay, Cash App, whatever you normally use.
And SatsPay just handles the rest.
The system handles the immediate, irreversible conversion and settlement on the back end. To you and to the merchant, it's all just dollars. Seamless.
Okay, walk me through it. I see a SatsPay QR code. I scan it. What happens on my phone?
You scan the code. Your payment app pops up with the total, say, $50. You confirm, and this is key, you have to acknowledge a clear disclaimer. All sales are final.
Because there are no chargebacks.
Exactly. Because the payment settles instantly over the Lightning Network, the transaction is immediately final. The second you hit confirm, the money is sent and settled.
And what does the merchant see behind the counter?
One word, paid. Instantly. Their dashboard updates in real time. No 2 to 5 day settlement delay.
Which means no rolling reserves.
Zero rolling reserves. No account holds. Zero exposure to chargeback fraud. To the business owner, it feels like getting paid in secure digital cash.
Now that we get the process, let's put the two rails side by side.
Mhm.
The contrast is pretty dramatic.
It's night and day. On the old rails, you have those 4% to 10% fees, you're subject to shutdowns, you have long settlement delays, and you carry all the chargeback liability. It's a punitive model.
And SatsPay.
The standard fee is 2%. No chargebacks. You get instant settlement, and you're on a rail that is immune to some banker's arbitrary decision. The savings from just avoiding those 180-day reserves are a game changer.
This brings up a deeper point about security. It's not just about speed, it's about finality.
Finality is the key word. Traditional networks are built on trust and liability. Lightning is built on cryptographic proof.
So there's no middleman who can reverse it later.
Exactly. Once the payment is confirmed on the network, it is final. There are no reversals, no fraud claims against the merchant. You just eliminated the entire administrative nightmare of defending against chargebacks.
So really, the legacy system says the business is high risk, while SatsPay says the transaction can be made low risk through technology.
That's it. It's an infrastructure solution to a liability problem. They didn't fight the banks. They just built a better system that the bank's rules can't touch.
Let's zoom in on a specific use case, because the one in adult entertainment really ties everything together: security, cash flow, and safety.
This industry has always had a huge cash problem. Everything is cash. Payments, tips, everything.
Which creates a ton of risk.
Massive risk. Risk of theft, employee disputes, and just the operational cost of handling all that physical money.
And the sources pointed out the personal safety risk for the performers.
Absolutely. When a performer finishes a shift at 2 a.m. with pockets full of cash, they become a target.
That's a huge personal risk factor.
It is. And the club has to deal with accounting nightmares and potential for stolen tips.
So how does the SatsPay tipping feature solve this?
It's brilliant. It's digitized and instant. The performer could have a bracelet or a badge with their own personal SatsPay QR code.
Okay, so it's unique to them.
Unique to them. A customer wants to tip, they just scan that code with their phone, the payment is confirmed instantly, and the money lands immediately in the performer's SatsPay balance. In dollars.
So the performer gets an instant notification that the money is secure, and they don't have to walk out with a huge wad of cash.
It completely changes their safety profile. And for the club, it's a huge operational win.
Cleaner accounting, I assume?
Perfectly clean, tracked accounting for every single tip. No more stolen tips, no more disputes. And frankly, it gives them a huge competitive advantage in attracting the best talent by offering instant, guaranteed, secure payment.
That makes perfect sense. It's not just about payment, it's about creating a safer, more professional work environment.
It turns an insecure, cash-heavy environment into a secure, instant digital one. Every single payment is final and tracked.
All right, let's get into the brass tacks, the pricing. So a business owner listening to this is paying, say, 7% today.
Yeah.
What does switching to SatsPay actually cost?
There are two phases outlined in the sources. The first is the pre-launch pricing, which runs until April 21st, 2026.
Okay, what are the numbers for those early adopters?
They pay a one-time $1,000 registration fee, then a $500 monthly service fee, and an incredibly low 1% transaction fee.
Just 1%. So compared to 7%, that's an immediate 6-point gain on your margin.
Instantly.
And what happens after that pre-launch period ends?
The standard post-launch pricing kicks in. The registration fee goes to $1,500, the monthly fee to $750, and the transaction fee moves to a flat 2%.
But even at 2%, when you factor in the complete elimination of chargeback costs, which can add another percent or two in losses, the savings are still just dramatic.
The ROI is almost immediate, especially for a high-volume business. SatsPay isn't just offering lower fees, it's offering something these businesses have literally never had: a stable, predictable, and protected way to get paid.
They actually get to keep their revenue.
They get to keep it. The system respects the finality of their sales.
So we've really established that SatsPay isn't just another credit card alternative. It's a completely parallel infrastructure.
It's a parallel financial rail built for the industries that the legacy system decided were too controversial or too difficult to serve fairly.
It's the technical response to financial discrimination.
It really is.
Yeah.
It's saying, if you won't build rails for us, we'll build our own.
Okay, final thought for our listener then. This move toward irreversible, instant payment rails, powered by tech like Lightning, seems like a direct response to that banking gatekeeping. This feels like a major structural shift.
I think you should consider the wider implications. We focused on a few industries here, but think about any heavily regulated, cash-intensive, or even just politically unpopular industry around the world.
Right.
If you can abstract away complex tech to provide instant, final, and protected settlement, this model could become the blueprint for any business that operates outside the legacy system's narrow definition of acceptable.
It's fascinating stuff. Thanks for guiding us through this. It's a great look at how core technology that's often misunderstood, is being packaged to solve these really complex, real-world problems. It's a financial lifeline.
For industries the banks abandon.
We'll see you for the next deep dive.